Hi guys, welcome to the YouTube channel, The Novel Trading. I'm your trader and trainer, Mr. Goel over here. Today we are going to talk about a very interesting topic in the gold trading is to how to mark the institutional market structure. So basically as a trader, we all know that the market structure is highly important for us to understand where is the direction of the price. And to decode this direction, we use the concept of the market structure. So normally we have understood this kind of market structure that whenever the price is breaking up this support, this is known as the breakout structure in the market. That means the price has broken the structure towards the downside. And from here, price will do what? After breaking the structure, price has created a new lower low in the market. Right now, we are revising the retail concept, and then by the end of the video I'm going to show you about the real market structure. How can we map the market structure institutionally, and what mistakes do you do normally while drawing your market structure? So let's understand this concept over here. What is happening? The market creates a breakout structure again and creates a new lower low, and this is my new lower high in the market which created this lower low. Now from here the price started the pullback and continued the major structure towards the downside, creating a new breakout structure towards the downside. And as soon as the previous resistance is broken in the market, we expect that this is nothing but a change of character. That means we are expecting that the price is going to change the character towards the upside, and now the price is going to go towards the upside, giving you a proper breakout structure towards the upside. And then market follows what? Market creates a new higher low in the market and then breaks out the previous resistance, creating a new higher high. After this higher high, price starts the major pullback towards the downside, again creates a new higher low, and then break the structure towards the upside, creating a new higher high, a new higher low, and then a new breakout structure towards the upside until this trend is broken over here and creating a what? A change in character towards the downside. So this is how the normal structure looks like. But in reality, this doesn't happen because the candles are very peculiar and highly technical. So what is the real picture that you will see in the real market is something like this. Market will create a series of swings by which we will be confused how to actually practice this market structure. Over here in this chart, I would like you to draw your own market structure, and then I will show you the real swing points from where I will be creating the structure. Take a pause for 10 seconds and try to practice your market structure over here, and then I will give you the real picture and see how many points are you familiar with, and you will draw the correct structure. So I hope that you have tried your own market structure. Now let's look what is happening in the market. The real market structure looks like this. So over here, what does happen? This is a normal breakout structure towards the downside, and again the price is pushing towards the downside, creating a new lower lows. But actually this is not a confirmed low because the price has not taken out the liquidity from the above level. So over here, when the price continued towards the downside and took out this previous high in the market, taking out the liquidity, then that means this is your first indication that the market has taken the upside liquidity known as the inducement. And after this inducement has been tapped, we can expect that this is our strong low in the market because this forms a proper Quasimodo in the smart money concepts. Now, what is happening over here? Price started its major impulse direction towards the downside and continued till the time price gives a proper breakout structure. So let me mark it properly. What happened over here? This is what is known as the inducement in the market. So price will do what? Price has to take this inducement to confirm that this is your new lower low in the market. After the confirmation of the lower low, price will create some swings in the market and then will try to break the major structure towards the downside because the direction is still towards the downside in the market. When this support is broken out of the market, this is known as the major breakout structure. Now after this, what did happen? The price created this major liquidity just above the major breakout structure. So that means if this low is important, the price will take out this low first and then will try to continue downside, but that didn't happen. So that means this is not a confirmed lower low in the market. Rather, the market continued towards the downside, and this is all internal price action within this range. Then price continued and gave us another kind of breakout in the market. Now this is not a breakout structure, and this is your genuine lower low in the market because the market from this support has taken out the first previous lower high in the market known as inducement. Now your range is confirmed from this previous resistance to this new support in the market because this is the major resistance which has caused this breakout structure over here, and this range continues till over here until and unless price forms another Quasimodo in the market and takes out the previous higher low. Now this is your range, and we are expecting that the price will start the retracement, will take out the internal liquidity available in the market, and then will try to go towards the downside. So this is how the institutional structure can be mapped over the charts. And over here, what you can see that the price has taken out this previous resistance in the market, giving us a proper change of character in the market. So this will be regarded as a proper change of character. And if you will look, this previous high is now our confirmed high because this previous high has taken out the previous liquidity available in the market. Now this is how you draw the structure in the real markets. Various types of swings will be available in the market, but there will be only few swings really making the meaning in the chart. So what we are going to do today, we are are going to do a replay analysis. So I'm going to replay the charts in front of you so that you can understand how can we draw the structure properly. So this is a 5-minute chart on gold, and I've hidden the future chart so that we can understand how to draw the structure properly, know the direction of the market. Over here at the existing point, what can we see? We can see that the market, while going upside, took out this in the market and then moved towards the upside. So that means this is what? This is a proper break of structure towards the upside. As soon as the price is able to take out the previous liquidity or previous higher low in the market known as inducement, we are able to confirm that this is our confirmed higher high, because from this high the price started going downside and took out the previous liquidity, and from here the price continued its major direction towards the upside. So this, after the body confirmation, will be properly known as major break of structure. Now what is happening over here? Price is continuing in swings towards the upside. Price is creating a higher high, higher low, a higher high again, a higher low again, a higher high, higher low, a higher high, and a higher low. But over here what you can see that the price has not taken out any previous liquidity, so we cannot confirm that this is our higher high, or maybe in the future the price creates another and then take out this previous liquidity, confirming that this is a new higher high. So what we can confirm in the institutional sense, that the price has not formed a new Quasimodo, and that's why it is not a confirmed high. So let's see what happens in the market in the coming time. What you can see is this is your last higher high in the market, and after that what we can observe that the price has taken this pullback in the market. After this pullback is done, we have to see where is our new highest high in the market. If you will look properly over here, the price has swept this previous level in the market, confirming that this is a higher high in the market. That means if the price is able to do what? If the price is able to take out this previous inducement in the market, this is our confirmed higher high, which will be regarded as the major resistance in the market. Now let's see if the price is able to take out the inducement or still continues. Now what you can see over here is price has tapped the inducement. It doesn't matter whether the price gives a body closure or it just wicks out. We need the price to come down and take out the previous liquidity or the previous stop losses of the buyers in the market. Now this is confirmed. This highest high is the major resistance in the market. So what we can do is we can draw this as a major resistance. As soon as the major resistance is confirmed, what we can see that the previous higher low, which created this maker of structure, from this previous low to this new high, this is the proper range of the market. Now the market can do what? Market will take the retracement, will take out all the internal liquidity available for the price, and then will try to go towards the upside. So what will happen in the market is that the retracement has started, and once the retracement is over, we can expect the market to go towards the upside and take out this external liquidity, confirming a new break of structure. Otherwise, what can the price do is that the price will continue its downtrend momentum and will try to break this previous support in the market, giving us the change in character, from where we will start taking out the sell trades in the market. But till the time the price is in uptrend direction, we are looking for buying opportunities only. So let's see what happens in the market from here is price starts moving downside, taking out the internal liquidity. Now what you can see over here is this is all the Asian session in the market. In the night after the New York session, what happens is there is the Asian session in the market, and in the Asian session you will usually see that there is a lot of consolidation in the market. So what we can see over here is that after the price has tested in between this range, the price has consolidated for a long period of time, the price has given the proper breakout. And why is this a proper breakout? Because over here the price has given us a proper body confirmation. So this will be regarded as a major break of structure towards the upside. This is how you can catch the direction of the price in the real sense, and you will not be getting confused in the market. Even if the price has given us a minor chalk, that doesn't mean that the price wants to go towards the downside. The price has just started the retracement towards the downside. It will take out all the internal liquidity and then try to go towards the upside, which is its impulse direction in the market. So after the break of structure, we can confirm that this is our latest support in the market. So if the price after the break of structure comes back, takes out this liquidity, then this will be confirmed higher high. Or otherwise, what can the price do is will continue the break of structure towards the upside. So let's see what happens in the future is price is continuing the major structure towards the upside. You can just transfer the inducement to the next higher low in the market. Until and unless this previous higher low in the market has been taken out, we cannot confirm the new higher high is being formed in the market. So price is still moving upside and price has started the pullback from here. So this is a resistance. This is a proper pullback. If you don't know what is a proper pullback, you can go to my channel, the Goel Trading, and over here I've given the proper video of what is a valid support and resistance in the market. So let's continue over here is price has started the retracement. Now let's see what happens is if the price is able to take out this inducement or the price continues towards the upside. Now what we have to compare is where is our new higher high in the market. Price is still consolidating in the Asian session. The Asian session has again started, and that is why it's consolidating. Now let's see if the price has given us the proper higher high. If you can see over here is price has properly given a new higher high in the market, and below this higher high your nearest support is at this level. So if the price comes back and takes out this support level, that means this is an inducement in the market and this high will be confirmed higher high in the market. So let's see if it is able to take it out or not, or if it continues to make a new higher in the market before taking out the liquidity. So what did the market did? The market continued the structure, and this is not again a breakout structure. The price is just continuing the retail structure towards the upside. So this is a new higher high in the market, and this previous support in the market will become our inducement. Before the breakout structure, if you will look over here, before this retail breakout structure, what we can see, this is our last support in the market acting as inducement. And as soon as the price takes out this level, we can confirm that this is our new higher high in the market. So your major range in the market is from previous support available at this level. So this is our major support in the market, and this is a new higher high. So this is the total range of the price in the market. Now what is happening is the price has started the retracement. Either the price will take out the internal equity, will try to go towards the upside and give you a major breakout structure, or the price will come down and will try to break the support and will give you a major change of character in the market. So let's see what happens is in the continuing direction, what does the market do? Now over here, what you can see that the market has continued the major direction towards the upside. Just after taking out the liquidity, market made a support at this level, and from this support, price created a new breakout structure towards the upside. And because this is the body confirmation over here, we can regard this as a major breakout structure. Now over here, what we have to do after the major breakout structure, we have to confirm where is a new higher high. So this will be regarded as the major support in the market. So now we have connected our major support. If the price goes below this level, then there will be a change of character in the market. Otherwise, the price will first confirm a new higher high by taking out the first liquidity available. Since this is the highest high in the market, the inducement available for us is at this level. So this is our inducement. If the price is able to take out this inducement, then only this will be confirmed as a higher high. Otherwise, the price might continue towards the upside and then take out the inducement in the market. So if you will look over here, price has taken out the first inducement in the market, confirming that this is a new higher high. So while the price was going downside and taking out the inducement, price has also given a body confirmation below the support level. So this was the major support level which confirmed the next higher high in the market. And from here, we have seen that this is a major chalk in the market. So after this change of character, what can we expect? We can expect that the price wants to go towards the downside. But before going downside, the price will also take out the inducement to confirm where is a new lower low in the market. So what did happen over here? The price is given us the proper breakout structure, and this is our major inducement in the market. Price is still continuing towards the downside, and before continuing, price has given us a new pullback in the market. So this will be your new inducement in the market. But while going downside, price reacted something like that and then continuing towards the downside. So let's see if the price takes out the inducement or just continues the structure towards the downside. So price has taken out the first inducement in the market. Now this is your inducement in the market. And now what we are expecting that the price will try to go towards the downside. So this is an order block in the market. Let's see if the market respects this order block, or what will happen. The price will try to go towards the upside and then will give you another chalk towards the upside. So this is how you can read the price action on a regular basis and know the market structure. Higher probability says that the market is in downtrend, but a mild probability also says that the price can still go towards the upside and take out the above liquidity available over there. So let's see what happens in the market is, if you will see that the market reacted from this order block as I told you, and then the market tried to give you a breakdown towards the downside. So while the market gave a proper breakdown towards the downside, because this was a confirmed support in the market, as this was a Quasimodo formation as I just told you. Now what you can see over here is that the price has not given a body confirmation. That means this is just a sweep in the market, and we can still expect that the price has not given a new lower low. That means your lower low is shifted from this level, this level, because this is just a sweep and not a body confirmation. So your new range of the price is from this high to this low in the market. Let's see if the price continues towards the downside or how it will react. So price goes up after sweeping the previous level. What did happen? Price started moving towards the upside and take out the liquidity towards the upside, giving you a proper chalk in the market. This is another change of character in the market. Now price swept the previous lower low and then started moving towards the upside, and price properly gave the body confirmation so that we can suggest that yes, this is a proper chalk. Now let's see what happens is, if the price is able to give us the inducement. So where is their new higher high in the market? You can see that this was a pullback which is swept at this level, and again the price swept the new level, creating a new higher high. So how does the price action worked over here? Price went, took a pullback, price went up, another time took a pullback, and then started moving towards the upside, creating a new higher high. That means this is our major inducement level in the market. And if the price has taken out the inducement, this will be confirmed as a higher high and a major resistance in the market. So your new range of the price is from previous this support till this new higher high in the market. So this is your proper range, and let's see now what happens is, we are expecting that the price will take out the internal liquidity, mitigate some order flow or order block in the market or over here as well, and then we'll start the movement towards the upside. And if the price is not respecting that, the price will go downside and will take out the liquidity towards the downside, giving you a proper chalk. So you have to understand, whenever the price confirms the range, price takes out the internal liquidity and then try to target the upside liquidity, or known as the external liquidity. And the external liquidity is available above this major resistance and this major support over here. We have marked a support, and now let's see what happens with the price, if the price is able to go down or up. Now look at this, how the market behaved. First, the price just wigged out this previous level in the market. So this might be a proper news momentum, because this is how how the news behaves in the market. Price wicks out this level, price tries to go up, but is not able to go above the resistance. And then it wicks out again. This is another sweep happened in the market. So without the body confirmation, you can see that price has not confirmed the change of character. Rather, the direction of the price is still upwards because this is just a sweep and not a proper change of character. See what happens in the market over here. What you can see that the price has given us a proper body confirmation, confirming that this is nothing but a chalk in the market. And over here, this is your last resistance in the market. So your chalk started from this previous high in the market and is still continuing until the price takes out the first lower high in the market, or known as the inducement. The price has not confirmed the lower low. So let's see what happens is. So over here, without taking the inducement, price created another breakout towards the downside. Now you have to remember that this is not a major breakout structure because the price has made this breakout without confirming that this is a lower low. So our new inducement level is at this resistance. So now let's zoom at this level and try to understand, after the breakout, this previous lower high in the market becomes your inducement in the market. And if the price is able to take out this inducement, then we can confirm that this is a new lower low in the market. So many traders do this mistake. They will try to mark this as a breakout structure, but this is not a breakout structure because the price has not taken out the upside liquidity. Before giving any kind of real momentum in the market will always try to fake you out. And that's what you have to understand. This is just a normal breakout in the market and is not a confirmed breakout structure. So let's see what will happen from here. If the market is able to go upward and take out the inducement. Now from here, what did you see? That the price has still not be able to take out this inducement in the market. So this is your new support in the market, and this is just retail support because the price is not taken out the inducement. This will not be confirmed. If the price goes up and take out this inducement, only then it will be a confirmed lower low in the market. Now you can see that the price has taken out this inducement in the market. So this will be confirmed lower low in the market. So your confirmed range in the market is from this previous high to this low. So this is your major resistance. If the price wants to change the corrector towards the upside, price has to take out this major resistance. And if the price wants to continue the structure towards the downside, this is your major support. So now what the price will do, price will take out the inducement, will try to react from the order block over here, or it will try to go above and take out all the internal liquidity, and will then try to mitigate the supply zone over here, and then will run its major direction towards the downside. So let's see if the market is able to react from this order block, or the price tries to go above and take out the extreme order block. So let's zoom in this level and let's see what will happen. So price is now on the first decisional POI, or known as a decisional order block. Let's see if the price mitigates this. The price has mitigated it but has not reacted it. So now we can expect that the price will go up and will try to mitigate the extreme level order block, and then will come to the major direction towards the downside. So let's see how the market reacts. The market is still in the retracement. Now let's see what happened over here, that the price has reacted from this extreme order block over here, and the price is continuing towards the downside. Now what you can see, that the price has just given us a proper breakout structure towards the downside. So this will be confirmed breakout structure towards the downside, and you know that the direction is downside because this was a proper institutional structure which gave you this is your major low, and now the price will try to target this only. So over here you can see that this is how you have to make your institutional market structure. This is how you map your institutional market structure, and not in the retail way. Now I have to start with a live trading program over here because the CPI news is going to come in the market, and I've also uploaded some analysis regarding that. Do make sure that you watch the analysis properly and then subscribe to the channel so that you don't miss this advanced analysis. I'm going to show you a lot of institutional concepts in this market, so do hereby stick to these concepts. And in this part 2 of this video, I will continue the market structure from here and will try to teach you more about the institutional market structure, how the inducement works, how the trap liquidity works, how the order block works, and how can we identify the real POIs in the market. Till then, good luck to your traders, and I hope you make lots of dollars of profits in the market. See you next time.